Well, we had Kenya's Equity Bank posting a 43% growth in pre-tax profit for the first quarter of this year to 1.7 billion shillings. And joining us now to take us through the results is James Mwangi, the bank's CEO. James, thanks so much for joining us this afternoon. Well, the story with Equity is certainly one that we're not unfamiliar with. We're used to seeing these kind of numbers out of the bank. So I want to go straight into the bank's banking model into regional markets like we've seen into Uganda and Sudan, simply because it is key to the company's growth moving forward. Do you think that you're going to be going down the acquisitive or organic growth strategy in employing your regional strategy moving forward?
Thank you very much. I believe we shall adopt both strategies depending on the areas that will be able to enter into. In countries like Southern Sudan, we didn't have a choice that to be a greenfield. In Uganda, it was an acquisition. So the opportunities that will avail themselves will determine whether it will be organic or it will be inorganic growth.
Well, certainly Equity Bank has a very unique business model in Kenya itself. How have you had to adapt your business model to take advantage of this regional market as you grow your regional footprint, if at all?
Thank you very much. The first tweak is particularly on the use of infrastructure. We believe that to be able to take full advantage of the regional growth, we must have very robust infrastructure which can reduce the cost of doing business and, more importantly, enhance the transactional processing capability and ease of doing business. The second one, of course, is capital base. We need to be able to increase our capital base significantly so as to be able to deal with opportunities like maybe oil eventually in Southern Sudan, oil in Uganda, as they start exploiting those resources. Those type of projects eventually will dictate that capital is looked into. And of course, the structuring of the bank such that it has a group structure that responds effectively to the challenges of a group and regional operation.
Well, we know that certainly on this drive to, achieving all of those targets, Synergies have played a very big role for the company. We know that the bank's partnering with, for example, mobile operators has been a popular avenue. What synergies do you see moving forward? Where can we expect to see new investment getting made in these new territories when you're expanding your products and services?
Thank you very much. I think one of the greatest innovations that will come out is a greater use of the convergence between banks and telecoms. I think that would really reduce the costs of accessing financial services and even the actual financial cost of delivery. We are seeing ease and comfort of people accessing financial services from their houses, from their offices, and even from the streets with the cell phone. The day that the cell phone will really become the nearest branch will be the ultimate day in terms of taking financial services to the last man. I believe also acquiring of merchants, either through Visa and MasterCard, will be essential because then banking services will be delivered through established merchants through an agency model.
Well, let's take a look then at your operations now in Kenya, because certainly while you've got that regional strategy at play, you're not sitting on your laurels in the East African country itself. There's been a lot of speculation about your interest in National Bank of Kenya itself, and this would, if you go down this route, mark a pretty big departure from Equity Bank's previous policy in Kenya of expanding organically in the territory. So why does this make sense for you now?
I think it would be unfair for me to enter into the speculation regarding acquisitions of institutions that are not on the table. As I've said in the past, that question would be very, very appropriate when one says we have a deal on the table and you know how the deal is structured. At the moment, we would like to leave it to speculation without adding our voice on that until we have something on the table that we can respond to.
Well, certainly we look forward to having you back in studio then when something emerges on that front. Let's move on. The Kenyan banks are being required to have at least, 1 billion shillings of core capital from the current 250 million shillings by the end of 2012. How do you see this regulation changing the playing field in Kenya itself?
It is true that with the increase in capital fourfold, we expect that to induce some convergence in the banking industry. We have started seeing institutions talking or discussing possibilities. We also believe that niche players will then find it slightly difficult if the niche is not big enough to support a reasonable return on such a huge capital base. So to a great extent, we are seeing that maybe there will be some sort of restructuring that will occur in the banking industry, and also we are likely to see some sort of consolidation.
James, looking at your numbers today, they are certainly impressive in the current context. 43% increase in profits before tax, profit after tax growing 36% as well. They're nowhere near the triple-digit numbers we were used to at one point in time, but given the current environment, certainly impressive in the double digits they stand at right now. What are your prospects for growth for the year moving forward?
We're very, very excited regarding the performance because Equity Bank Kenya, the holding company, has been able to bounce back with a profit of over 120% growth for the first quarter. And that to us is a clear indicator that the economic environment which we are operating has changed. Yeah. And given the size of the subsidiaries is tiny, by the third quarter, we would expect that huge growth in the holding company to carry the subsidiaries, particularly ones they break even by mid this year. We have seen Southern Sudan have started making positive contribution to the profit, and we are very optimistic that Uganda will be able to do the same before September or by September. And that essentially then means that our investors should be reasonably looking for very good performance this year.
On that note, James, we're going to have to leave it there.